let me walk you through two momentum setups that actually took place today, and I'm gonna rate them based on the setup. Now, setups come up, and you have to act based on what the market gives you, based on the price action. Now, there's two things that I look for in my setup. One, is there a squeeze? And as you can see here on the left screen, these are both 5-minute charts, but they're different times in the day. So this is right before market opens at 7:15, and this is after the market's opened at, we'll just say 9:45, right? So we're looking at a 2-hour difference. This is right as the New York session opens. Again, I'm on Mountain Time. But what happens here is we get a squeeze, the momentum's coming down, but we have moving averages that are stacked on top of each other, okay? That's what I like to look for. I like to see a overarching trend going up, the moving averages are stacked, and now we have a squeeze. So this could potentially be a double bottom, right? Or it's a great entry point because it's coming to the moving EMA, the moving average, and it maybe will bounce. Now, this to me is actually a B setup. The reason for this being a B setup is, yes, we have the trend coming up, but look at the momentum. It's dark blue, which means it's coming down. Sure, it's consolidating, and we have the moving averages stacked, but there's just one thing that's off, and that is the momentum is coming down into the squeeze, okay? Now, this on the right-hand side is what I would call an A+ setup. So we have a drop. So if you can tell, this was a drop. So we had a moving average cross, we had a break of a key level, the squeeze fired short, okay? So it did what we wanted to do as far as it broke a key level. The moving averages were not stacked, but we had a key level break and we had the squeeze fire to the short side. So it hit 2 out of 3 of our setup guide. Now, in the right-hand side, after this fall, we have the squeeze, right, fire. It comes down, and then we see a slight retracement, comes up into the moving averages. Now, this is the key. So we've switched the trend from long to short, right? So this looked like it was going to go long on the upside, right? We had our moving averages stacked on top of each other. Now they're stacked, but they're inverse, right? So the MEA is below the 21 and then below the 200. So this is a short setup. So we are getting the price action. It's coming up slowly, right? So we see, okay, momentum's shifting a little bit. But what we see here in the price action is it makes this high, this 22.29, and it's just steadily falling. It's falling with the EMAs, right? And we get this consolidation, it's turning red, and then we see that it just keeps following that channel down or that moving average down, and then boom, it has a bigger than expected move with the squeeze firing to the downside. So this is what an A+ setup looks like. It's just inversed for the short side. So if this happened, if we flipped our chart, right, and this looked like it was upside down, then it would be going to the upside. But we have a perfect downside move with an A+ setup where we have the trend, the EMAs are in line with the direction, right? They're stacked to the downside, and it comes up to a resistance level and then builds up some consolidation, some energy, and then that energy is released to the downside. So we had two setups today, one in the morning, which was a squeeze setup and a key level break. So it hit 2 out of 3 because the moving averages obviously crossed, which again is a sign of it going down, but it's a little bit delayed. And then here we had the moving averages stacked and they just kept going in that direction. We had consolidation, fail at a level, and then just more downside once that squeeze, that momentum indicator, pushed us downward. So we got let's look at the Fibonacci's here so you can kind of see how this looked, right? So if you see this setup happening, it's like, okay, well, where do I take my profits? Well, what we're looking for on this Fibonacci extension is obviously for it to break these levels, and you can see where they paused at the 618, comes back up, and then once it breaks through that, boom, we just see more downside. So that's how you trade using an A plus setup for a momentum indicator, and then also a B plus setup. A lot of people have been saying the price action sucks, the price action sucks. Well, the reason people are saying that is because that there's just not really a clear direction. Like, look, it's setting up long for this example, and then boom, it goes short, which is why I love in our Discord that we actually use key levels on both sides. So we're unbiased. So yes, we would love to see it follow through for the upside, but if it doesn't, we still have a plan in place where it breaks a key level and we can go short. And we did that in the Discord today. So if you'd love to learn more information like this, learn how to use momentum indicators, if you're trading for a beginner, if you're learning how to use prop firms, follow me on YouTube and I'll give more deep dives into what an A plus and a B plus setup is. And you can actually go to the WAP and download my setup guide. So thank you for tuning in, give a follow, and we'll see you in the next video.